All right, so I'm going to go over a couple things that investors, especially newbies, need to be aware of as they're watching maybe a video online about how to get into real estate, how to do a fix and flip, how to use a DSCR loan and use the cash flows from the property to be able to qualify. And um, some of the conversations make it sound probably easier than it really is. And once you're a seasoned veteran, you've got the experience, things become, simpler and easier as you get further along in your journey and you have the track record. But you're just starting out, there are some things that is important to be aware of. And I'll start with the fix and flip loan. So let's say you go find a property that needs to be renovated and then either sold or potentially kept as a rental. And so you get the good deal, you find out a price, you do your analysis on how much it's going to take for renovations, and then your ARV or after repair value of what it may be. And from a fix and flip lending standpoint, the lenders that are out there, they're going to want to see experience. So if you've never done a fix and flip loan before, there's probably going to be some additional parameters that are going to be required to be able to do the loan. And that may be more down payment. It may be maybe even an additional person to co-sign or be a partner on the deal. And so, let's say you buy a property for $100K and you put in $30K of renovations and the after adjusted value is $180. So how much money do you need to have for down payment? And just starting out, I would just assume 25% down. So let's say that you have 100. Actually, let's see if I can share my screen. Let's not share my screen. Now let's do it. So you've got 100,000 plus 30K renovations, which is a light renovation. That's 130,000 times 25%. That would be example, $32,000 for a down payment, maybe even more, depending on the situation and the lender. And then you also get into credit scores. If you've never done this before, lenders are going to want to see a better credit score, probably over 700. If you've done these before, maybe you can go down to the mid 600s. There's a couple different scenarios that could be doable. So, yeah, you need 32,000 and change for down payment. Also, you're going to need that for closing costs, and then there's also going to be money needed for carry costs, interest, and property taxes. I think from a fix and flip, analyzing a deal standpoint, there's some calculators out there. There's a few that I use, and definitely want to be looking at the carry costs, and then also the closing costs. When you do a transaction, when you buy a transaction up front, you're going to have appraisal, title, recording, and in certain states, maybe even transfer taxes, like a state like Florida or Georgia or Maryland or Virginia, et cetera. Those transfer taxes and fees and recording and title and appraisal will also go into your calculations for break even in your profit analysis. So when you purchase the property, and then also when you are selling the property, you're probably going to have real estate commissions involved as well. So those are just some of the basic things to be aware of. And so depending on how big the project is, some of the stuff can add up pretty quickly as part of your carry costs on top of just the actual renovation and upgrade. So limiting factors, credit scores, how much money you need for down payment are just a couple examples of things to be aware of. On the DSCR loan standpoint, you kind of get into a few other things that people aren't aware of. And one of the common questions that I come up with is, well, what's the minimum loan amount? A lot of the lenders have a minimum for DSCR loans, so debt service coverage ratio, where you're just looking at the rental income on the property. These are typically done in an LLC, not in your personal name. And so the minimum scores, the minimum loan amounts typically are going to be between 150, 125, and 100 is typically the lowest that I've seen. for the lenders that I know of and use for a minimum loan amount. So if you go buy a property in Missouri or Pennsylvania or Ohio or somewhere in the Midwest and it's a single family property and it's $75,000 or $60,000, you may not be able to do a DSCR loan because of these minimum loan requirements. So what is the solution for that? I do have a couple things that I'll bring up in just a second. A couple other things to be aware of on DSCR loans. One, we're going to look at the rents versus the payment. So the DSCR percentage is 1. You want to be over 1, ideally. So if your rents are $2,000 and your mortgage payment is $1,750, your delta there is $250. So you're going to be above 1 for your DSCR. You're going to be over 1. So what if you're below 1? Well, there are products, but the rates are going to be adjusted, and it better be a really good deal, and there better be other things going on of why you want to do it. So the rents are going to be one important thing. How much money do you need down? 20%, 25%. Depends on the deal. If the deal cash flows well enough and you've got experience, maybe you can get away with doing 20% down. If you don't have experience, and when we say experience, they're looking at, for both of these products, they're looking at, in the last 3 years, how many fix and flips or how many rental properties have you operated, owned, purchased, sold in the last 3 years? So, 0 is no experience, 1 to 3 or 4 or 5, kind of that middle, and, more than 6 is going to be kind of a higher level. So then if a deal does DSCR above 1, and you're a first timer, you're probably going to need to put 25% down in all reality. So, okay, then what? You're going to get an appraisal. You're going to verify the LLC and insurance and other things you're going to be verifying in terms of history. And then what else is going to be involved? Well, the pricing of the loan. So 30-year fixed products are available. These products typically have points built in, 1 point, 2 point, 3 points on top of the regular fees. So a point means 1% of the loan amount, 2% of the loan amount. Origination fee somewhere around $1,500, give or take. And then you're gonna have your typical title fees, recording, things like that. Maybe even have to do escrows to set up for taxes and insurance. But then, unlike conventional loans, there is no prepayment penalty. You can pay it off whenever you want, if you wanted to refinance or sell it. On these types of loans, you're typically going to have a prepayment penalty. And one standard prepayment penalty is 5%. So 5% of the loan amount or the active balance at that time would be the amount of prepayment penalty. So think of rates as a sliding scale, right? So higher on the rate sheet, less points, lower on the rate sheet, and the rate sheet, buy down the rate, you're going to have a better rate, but you're going to be paying for it out of pocket at closing. Same thing is going to apply for prepayment penalty. So if you've got a 5-year prepayment penalty, you're going to have a lower option on the rate sheet. The less time you go, 4, 3, 2, 1, you're going to have the rates shift up or the cost shift up accordingly. And I posted a video comparing a conventional loan versus a couple prepayment options with a DSCR loan previously on this channel, to kind of give an example of the difference in rates and fees and payments accordingly. And, again, a conventional loan, you're looking at the borrower's personal profile for income to debts and credit and all that stuff. On the DSCR, you're just looking at the property rents and their credit and their profile and history and experience. So if you're looking to potentially be nimble of, let's say that rates do go down, or you're going to maybe sell within a certain period of time, those are things to be aware of. What kind of time horizon are you going to have the property to be aware of if you're selecting different options? So, a lot of people that I'm talking to are looking for a 1 or 2 year prepayment because the word on the street, you hear in the headlines and hear in the news, is that rates are going to go down at some point. And so if that happens, then you're going to want to be able to potentially be nimble. Now, that 5% prepayment penalty is something that would get tacked on to your payoff. And so If you pay it off early, then that's going to be part of your out of pocket or potentially payoff if you can roll it in. So let's see here. I'm going to take a quick second. Roll it in. Okay, so DSCR, fix and flip. I did mention, what if there is a solution? And one of the things that we've seen, we have a couple options that are out there are blanket loans where you can tie up a couple different properties under one debt instrument. And so a blanket loan would be, okay, maybe I've got 3 properties and I'm going to do one loan or pull cash out on multiple properties at one time and just do one loan. And so there are a couple of options out there where I've seen lenders go down to 75,000 as the minimum loan amount. And so I have somebody that right now that is looking at options, and they had a couple properties across different states, and they want to see these properties all in the same state to be able to do these blanket loans. So for this person, they had a $140,000 loan and in one part of the state, and they had I think a $60,000 loan in a different part of the state, and the averages worked out to where they were above the $75,000 minimum. And so they were able to proceed and do the loan and pull cash out under certain terms. And so that minimum loan amount, $75K, becomes an option if you do a blanket loan or cross collateralization. And so just some things to be aware of. Again, minimum loan amounts, credit score guidelines, down payment requirements. These are some of the things that newbie investors need to be aware of in terms of experience or no experience as you're navigating the different projects. And then just, again, some things to be aware of in terms of costs, carry costs on the loan, property, taxes, insurance, things like that, buying and selling, closing costs on the loan, title fees, appraisal, transfer taxes, recording, appraisal fees, realtor fees that could be involved as well. Again, other things involved, but if you have any questions, you can reach me on my cell phone, 314-956-1580. You can text me, or you can email the Strive for 25 email, which is strive425joel@gmail.com. So Strive for 25